Hey guys, what is happening? And welcome to this live stream. So we're back in action. So before I go over this Better Dwelling article that just proves the insanity of what is going on in the bubble economy here in Canada. And we're going to go over the markets because they have took an absolute hammering today and over the of this week. We've seen the Nasdaq fall into new lows, the S&P 500 fall into new lows. So first of all, let's take a look at Canadian markets. They finished for the week down, and just today down 1.7%. They closed up for the week down about just under 100 points actually. So not that substantial of a decline, but they're heading down towards a new low. Looks like it's going to be a new low. No, not a new low for the year, but looks like oh yeah, it will be a new low for the year soon enough. So the S&P 500 down a whopping 3.63%. And I mean, that is its yearly low right now. And it's heading into bear market territory, if not already in bear market territory. I mean, it started the week off at 4,229, and now it's at 4,131. The Dow also down. The Dow Industrial Average 2.77%. It's fallen on the week. It's now down from 33,558 to 32,977. So that's a substantial decline in the Dow on the week. But the real mover is the Nasdaq. The Nasdaq is down from 12,753 to 12,334. But the real thing about the Nasdaq is it is in bear market territory now. It's down more than 20% on the year, and it has a long way to go. In fact, if you look at this yearly chart right here, you can really, not the yearly chart, if we pull it up to a 5-year, it has a long way to go. The next level of support is at 10,911. So it could find support around 11,775 or 10,911. And then after that, we could be heading down to 2020 levels after the 2020 crash. So the NASDAQ is in a precarious place. Interestingly enough, they couldn't write the articles fast enough for the Canadian loonie because the Canadian loonie down on the week significantly, started off at 78.60 and now it's at 77.78. And you know, the funny thing is when you look at it, Canadian, they've took away, that is so, Reuters is just a bunch of clowns. Like, God, earlier today, Reuters had an article here that was Canadian dollar rises on economic strength because of the GDP numbers. But by the end of the day, the Canadian dollar was down. So, of course, they deleted that article. And it's just like, come on. So if you look at the loonie, like it is down significantly. You've got oil, which is at $104 a barrel, and the loonie is sat at 1-year lows against the Canadian dollar. So oil is really not having an effect on the loonie, and that is very dangerous because that really shows how it's decoupled with oil now. And when the banking crisis hits here in Canada, people are going to be looking around. They're not going to understand what is really happening. And it is just, this gives us incredible insight because when the banking crisis happens in Canada, not if, when the banking crisis happens, the Canadian dollar is going to absolutely tank because there's nothing behind that is sort of holding it up. I really think the only thing that is holding it up is the stock market, which is a dangerous thing that you want to have correlation to. So anyway, that's financial markets. And then just quickly before we go over this article, just want to go over bonds, because bonds finished up slightly, I think. So basically the 2-year up 11, nearly 12 basis points at 2.62%. I mean, this is the real mover. The 2-year is just absolutely hammering forward, which is what you would expect. And I think the Bank of Canada starts quantitative tightening on May 6th, I believe. So it's going to be interesting to see what happens. It shouldn't affect any of these markets really fast. It'll only be psychologically. You might actually see some buying into these markets because people will be like, oh, there's a lot of sellers, and the banks will just buy it because they need to hold a certain amount of safe and liquid assets for regulatory requirements. So you can see here the 2-year 2.62 catching up with the 5 at 2.74. And that's up significantly today, 8 basis points, but still not at the highs that it was at a couple of weeks ago. Like it was at 2.82%, the 10-year 2.86, and it is miles inverted over the 30-year. The 30-year is at 2.74%, and the 10-year is at 2.86%. So you get a higher rate of return for 10-year bond versus a 30-year bond. Why is that? That is because people who are buying the 30-year bond are predicting that that rate of return, that 2.74%, is going to be a good rate of return going into the future. And that means that they're predicting the economy is going to go bad because they're thinking rates are possibly going to go down. And that's why that bond on the 30-year is lower than the 10-year. That's why these curves invert. And once we see the 5 and the 2s go, that means we're really getting close to this happening, because that means that people are starting to think like 5-year, it's not even worth holding a 5-year over a 2-year, that if the percentage of return gets higher for a 2-year than a 5-year, then that means we are really close. And I do believe we are close. I believe by the end of this year, we'll be in a recession, if not early next year. So it's coming, guys. And I think the United States could be heading into a recession before us at the rate it's going. And that's mainly going to be because of the fudge CPI numbers here in Canada. The CPI is even more manipulated here in Canada than it is in the United States. So we got All-Nighter Hyder in the house. All-Nighter, you're always in here. Thank you so much for your support. We got Trent. Thank you so much for your support. Thank you for being here. We got Revert to Means in the house tonight. HELOC usage on dumb things is another disease. Yeah, I totally agree with you on that, my friend. So yeah, it's and then we've got Nothing as the name. Thinking I might buy a rowboat and move to Russia. Likely more free there. I'm not too sure about. Well, who knows? I mean, it's hard to say these days. But anyways, let's dig into this ridiculous HELOC article. And it's not the article that's ridiculous. It's what people are doing that is ridiculous. So, but again, this just shows people are at their wits' end. So Canadians took out $2 billion in HELOC debt over just 28 days, the most since 2012. And that is the really telling thing. It's the most since 2012. Just think about the environment, and you're gonna hear a lot of red flags in this article as we go through it. I can tell you that much. So Canadian interest rates are on the rise, and households apparently took that as a warning to borrow as much as possible. Filings with the Office of the Superintendent of Financial Institutions, OSFI, show home equity line of credit balances surged higher in February. Over 28 days, Canadians borrowed $2 billion more in HELOC debt, the most for a month since 2012. Now, this is a big red flag because you have to think about what was happening with in February. We saw a boom in housing markets across the country in February. So that could have been attributed to home equity line of credit usage. People were taking out money from their home equity lines of credit, thinking, they thought over the holidays, they were sat around the table with their family thinking, you know what, we're going to get into rental properties. Are you, Bill? You're going to get into a rental property? Yeah, I'm going to become a landlord. I'm a really smart person. Prices are at all-time high. Immigrants are coming in. This guy on the news told me that real estate prices only go up in Canada. And also, I found out my local realtor told me that because the sky is turning blue this week, that means real estate prices are going to go up substantially this year. And he's also doing a tea leaf reading for me, where he's going to read the tea leaves and tell me that housing prices are going up. Again, guys, people will always look to what they want to hear. The fact is, as human beings, if you are making a poor decision, you're going to go, and I've seen this firsthand when I was a kid, and me and my sister. And it's kind of funny because I remember this, and even I did it. I'm not the smartest guy in the room at the end of the day. We all have this psychology kind of built into ourselves. But when we were kids, I can always remember, like, say if she did something or she wanted something, she would be like trying to sell it as a sales pitch. And I would be thinking, yeah, but you're just telling them all the good things. But what about the drawbacks of doing that? And that's the thing. People are always just laser focused on the good things about it, and they don't even analyze the bad things, when actual fact their entire attention should be diverted to looking at the bad things, because that's what can destroy them, instead of focusing on all the good things, all the fluff and everything like that. So it's kind of it's all the thing. All Nighter says, yeah, people believe what they want to believe. I'm susceptible. Yeah, we're all susceptible to that, unfortunately. We just have to be more cognizant of what we're doing. And that comes back to just apply logic to everything you do. And I really don't think you can go wrong with that. It's when people start getting carried away and emotional and things like that, that they really, and rushing is another thing. Like if you're rushing to do something, like me and Jared talked about on the live stream yesterday, and you can check that out if you didn't see that. It was a good discussion we had yesterday. But, if people are rushing to do something, they likely are going to overlook loads of different things. And unfortunately, that's the case with this. So Canadians owe $168 billion in HELOC debt. I mean, that number should shock you, but for most people, they're not going to even be able to comprehend that. They're going to be like, you know what? That number means nothing to me, Luke. But when you really start to break that down, like per person, you realize that that is a lot of money. Like that's all leverage. People are leveraging their home equity. It's unrealized profit that people are taking out. And these lines of credit, if the banks get into trouble, they're one of the first things that they're going to call in. And it's like me and Jared said on the live stream last night, the bank's your friend when they're giving you a loan, but as soon as things turn, they are your enemy completely. And the thing is, like, picture it. So there's a guy, he bought his house for $500,000 in Toronto. His house is now worth $1 million, and he's got $200,000 on a home equity line of credit. He'd done renovations to the house. He bought a boat or whatever it is. And all of a sudden, the bank gets into trouble. And the bank says, hey, that home equity line of credit, we're calling it in, so you got to pay it back. And he's like, I didn't even realize you could do that. Yeah, we could do it. So pay us back. Otherwise, you're going to lose your home. And he's like scrambling, not going to be able to pay it, obviously. And people try and take the banks into courts, and they just fail miserably. Grant Cardone, he took the banks to court. He had some successful court things that happened during 2008. But the reality is the average Joe and Jane is not going to do that. They're going to end up in foreclosure. And this is what people don't understand. There is no cash in Canada. And that's the funny thing, like actual cash that people have, no strings attached cash, like it's not attached to an asset or something like that. That is a finite resource here in Canada. Like there ain't much of that around. People who actually have cash savings. There aren't many people who have that here in Canada. Believe me, it's actually lesser than you think. Credit, on the other hand, oh yeah, that's plentiful. But credit is always linked to something, isn't it? And that's the thing. There's contingencies with credits. And the thing is with these home equity lines of credit, the bank, it's in their favor to foreclose on that guy in Toronto. Because let's say he bought it for $500,000, he's took out a $200,000 line of credit. So if the bank takes his house, they're making a profit if they turn that to the market straight away and even sell it at $100,000, $200,000 less. And some schmuck is going to come along and buy it because they're going to be thinking, oh, I'm getting a great deal, foreclosure, at least at the very start of the crisis. And that's what you'll see. But the flip side to that is when they start to call in these lines of credits and everything like that, they ain't going to be lending out mortgages. They're going to be really strict on who they lend mortgages to. And again, so he wants to sell his house or whatever to pay back that money. He can't find a buyer. So now he becomes like a distressed sale where he's trying to reduce the price. He's chasing the market down. So it is a crazy, crazy thing. And Rock Girl says houses are still turning like hotcakes. Yeah. And they will be, because you've still got an amount of people that have pre-approvals, rate holds. Like those people are still all out there. Like most people who were participating in the market like 3 or 4 weeks ago, they already had their pre-approval and everything lined up. So they are good to go. So, and they're going to be thinking and persuaded by their hungry realtors and mortgage brokers, yeah, you should lock in that rate. You should definitely buy right now and lock in that rate. Look, even the market is slowed down, so you can put in an offer. Like it's a really good time to buy right now. And they're thinking, yeah, I'm getting this low rate, and the rates have exploded since then, so everything's good. They don't understand that once those rates actually take effect in about 6 to 8 weeks' time, the market is going to have to readjust to those new rates. And that's going to mean prices coming down. And that's what people don't seem to put 2 and 2 together. So it's kind of crazy. So a lot of All-Nighter says a lot of our San Diego foreclosures are going right back to the bank or HOA that took that property. So yeah, that's interesting. Thanks for that information, All-Nighter. So Canadian households have been tapering their HELOC borrowing, but they're back with vengeance. Oh man, the balance hit 168 billion in February, up 1.2%, 2 billion from the month before. Households now owe 1.4%, 2.3 billion more in HELOC debt than they did a year ago. Balances haven't been this high since December 2020, reversing 13 months of chipping away at the balance in just 1 month. And then they show you the chart. So obviously the HELOC debt was actually contracting, which I guess was a good thing ever since 2013, pretty much, apart from the spike that we had in 2017 or whenever that was, 2015, 2016. But now it's going up again. But the interesting thing is not so much that chart, because I mean, like, just look at this chart since when is it, 2000? It has just it's gone straight up. Like, so this pullback to 175, is that percentage of GDP, or what is that? Canadian dollars? Oh no, that's Canadian dollars in billions. Yeah, so 175 billion. But the interesting thing is we see another thing about 2013. So Canadian HELOC debt is rising at the fastest since 2021. HELOC balances grow at the fastest annual rate in nearly a decade. Growth in February might sound small at 1.4%, but Canada hasn't seen the credit segment rise this fast since May 2013. It might not sound like much, but this is an unusual fast increase for a very large segment of debt with substantial interest rate costs. But that's not what's interesting. It's what happened in just February that is Canadian HELOC growth, the annual growth rate for Canadian HELOC debt. And then it shows you this chart and it shows you how it's rising after those declines. And it seems like it's about to rise to new heights. That looks like it's about to go parabolic. The biggest takeaway from the February HELOC numbers is the mind-blowing growth seen over just 28 days. An increase of $2 billion in the month is the largest single month increase since 2012. 10 years ago, guys. Just think about that. Just think about how different times were in 2012. Inflation was not running at the pace it is right now. So it's just and we weren't in a tightening cycle like we are right now with interest rates either. So this is just like dynamite. So excluding 2009, it's only occurred for 10 months in the past 386 months. For some reason, 2009 seems to have been the year everybody was in the mood to take out an exceptional amount of cash from their home. Well, we know why that was. And it's because basically after 2008, Canada lowered rates to the floor. And basically then everybody binged into housing, similarly to what we've seen in 2020, but much different to that because that was really just the kickoff in corporate debt and everything like that. And then basically in 2009, I think housing prices rose something like 20 or 30% from 2008 to 2009. It was some ridiculous number. I remember seeing it like 4 weeks ago. So that growth that happened, it basically, a lot of people after that thought, oh, my house has gone up 30%. I'm going to take out some home equity. What could I do with that home equity? Well, real estate's just gone up 30%. So how about we just shove it all into real estate? And maybe that's where the bubble of home equity line of credit really started to go into buying houses. The monthly increase also represented 87% of the net increase of HELOC debt in the past 12 months. Unclear why Canadians all of a sudden needed $2 billion in HELOC debt over just 28 days in February. Well, it's pretty clear to me because the housing market boomed in February, okay? Like a lot of markets hit all-time high prices in February. It was like the last hurrah for real estate, essentially. And we also saw home equity lines of credit, a lot of money being withdrawn in home equity line of credit. That basically just tells me that it's likely that that money flowed into real estate. And that just shows you how dangerous where the housing market has been put is. And it just goes to show how willing people are to take out leverage from their home here in Canada. And they don't understand the risks. They unequivocally do not understand the risks. And it is just crazy that happened. And another thing that it could have been just quickly is inflation. But I don't think so much because when you look at housing prices go up with credit. Obviously, if HELOC balances are expanding significantly, that means the credit supply is expanding significantly, and that means asset prices are going to go up like housing. That was a very foolish move for people who did that. But anyway, whatever their choice. The RRSP cutoff for this tax cycle was due in February, which may have led people to borrow home equity to top that off. Doubt it. It was also a month before the rate hike, so it's possible some cash may have been allocated to down payments to secure financing and lock in purchases. before rate hikes. It's anyone's guess, but it is surprising to see borrowers dive into debt right after the central bank tells them to pay it down. Yeah, and I outlined this on my Twitter like a month ago. Because a lot of people, the Bank of Canada was trending, and a lot of people were saying, look, the Bank of Canada is saying borrow, borrow, borrow. And they were so vague when they made that statement in 2020 about borrowing. It was just kind of like off the cuff comment where he said, we're just making it easy so that people can borrow. They didn't say, hey, go out and borrow as much money as possible. But people took it like that. And again, it comes back to people hearing what they want to hear. What a lot of people heard from that was, hey, go out and borrow. No consequences. I'm going to go out and borrow. But what they failed to do was, I put in one of my tweets that twice after that, over 2021, they were telling people the housing market is in a precarious place. People should start to think that rates are going to rise because there's substantial risks of rates rising significantly. They were saying that in May and September. Now, that wasn't so vague. They were being specific on that, but everybody ignored it, didn't they? Everybody just listens to what they want to hear. And I'm not sticking up for the Bank of Canada. All I'm saying is that people just are inherently stupid. This is the psychology of the 90%. That whatever they want to hear, if you have a business that functions because of the housing market, you are going to be biased as FK. It's hard for me not to use profanity, because obviously you're going to be biased because you own a business that benefits from the housing bubble and the housing market. So it's going to be very difficult for you to see problems in those markets, and unless you're a realist, of course, which is very unlikely, because there aren't, like, realists like me. They're becoming a rare type of people, and I think they're going to become rarer and rarer as things go on, because people are thinking less critically. They're not thinking using logic, and it's all emotional thinking right now. Everybody is just caught up in their emotions, and people just don't understand. They look at the wrong indicators, and they like to be told bedtime stories of how everything's going to be okay. Well, unfortunately, Canada has had the 12, 14, 15 years of this super bubble, and that has been the boom. The boom is over. It's about time that people started to accept the fact. If people who owned a business actually started to prepare for the fact that the housing market was entering a downturn, that would be great. That would be fantastic for those people, because they would be, in a better position going forward for when business slows down and, they haven't got the business coming in. They can pivot, do something else. Maybe it's cleaning houses or whatever it is. There's many different things that are going to boom even when all those things tank and go out the door. So it's just kind of, I don't know, it's interesting to me. I always find it interesting. So it's it's got to be. Yeah, Luke is full of FUD. He's trying to scare us. Shame on you, Luke. Yeah, Trent. Oh God, it's just it's kind of crazy when you think about it, because I in some ways there are times where I get kind of down, and I think, I wish things were different. I wish I could see a light at the end of the tunnel. And sometimes even I think, God, wouldn't it be easy to be like a person like Steve Saretsky or Nolan or some of these people who just basically peddle what everyone wants to hear, and or their own business interests because they have a business. And, fair enough, have a YouTube channel if you have a business. What really gets on my nerves is that these people hide it. Like, they're not upfront with it. Like, they don't disclose it. Like, I've just filmed a video about the banking crisis and the banking system here in Canada. And I spent a long time analyzing bank earnings, bank balance sheet. It was boring as hell, but interesting nevertheless for that video. And a lot of people, I'm sure, will just glaze right over it, go, you're an idiot. Banks are safe as hell in Canada. And I'm like, yeah, I'm sure you spent the 6 hours like I did going through the banks. And the reason I did that is to benefit people and help people out. I'm hoping that a lot of people watch that and they go, yeah, I'm with that bank. Maybe I should think about diversifying a little bit. You know, I'm just trying to get people to think a little bit differently. You know, at the end of the day, I don't want to see people get took out with the trash. That's not what I want to see at all. But, you know, we live in this environment now where everybody is just simply trying to peddle their own self-interest. And I really don't have any self-interest. And the funny thing is, which you'll see in that banking video, I disclose that I have a short position on the banks, which is fair enough. You know, the funny thing is, though, how many videos, I can't tell you how many videos I've watched from people pumping up stocks and all kinds of different things, and they don't disclose whether they're even long on the stock. Because again, you have a bias, and I suppose I have a bias because I'm short on those banks. But the thing is, I took those short positions because of some of the information that I'm divulging in this video. And, you know, I was actually thinking about this video because I wrote a massive report for myself about all the different variables and everything. It went into great detail. And I was like, there is no way I'm putting out this report for free. Not a chance in hell, because people are just going to try and rip me apart. And there's no way that I'm just going to give that out for free. So I'm not doing that. I'm just basically giving snippets of what I found and different red flags that I found along the way. But at one point I was like, maybe I should just put out my entire findings, everything that I found, my 6 hours of research, just put it out for free for everybody. But then I thought, you know what? No, I'm not going to do that, because I've spent significant amount of time and effort creating that report. And I don't want to profit off it. I'm not selling it and I'm not sharing it. But I'm just saying that basically people are just so stupid. It doesn't matter if you give them the whole report. They'll still say, there's no way this can happen. But, you know, it is really, it's really crazy. But, you know, it's absolutely nuts. Anyway, guys, it's been a great pleasure on this live stream again. So thank you so much for tuning in. And please hit that like button so other people see the live stream. I know the last one I did on home equity lines of credit was a good one. I think there's might be a video tomorrow with Scott Walters. So we might be doing a live stream tomorrow night. Depends. I got to talk to him about it and see if he's down for it. But it's either going to be tomorrow night or sometime next week. So watch out for that. That might be showing up on your feed, and set a reminder for that if you see it. But anyway, thank you so much, guys. Have a fantastic weekend. Take care of yourselves, and, you know, have a stiff drink if that's your thing, and just chill out and relax. And I will see you guys in the next stream. Take care of yourselves, guys. Thank you so much. Peace.